Ladies and gentlemen, this video might come as a surprise to some of you guys, as I've reacted to Google stock before in very negative ways. Okay. But yes, I have bought Google stock. It's official. And I actually made a presentation to you guys to show off why I am bullish, what I was wrong, and why I was wrong, and why I can eventually turn to become bullish, and things that I still do not like. But spoiler alert, they're not big enough for me not to take a position in this company, albeit small to start. Um, I was wrong about Google stock. But first, let's talk about the Discord. Future Investing Discord is live. It's down in the description down below, where we talk about all of these different things, like my opinions on tech stocks, or what you guys are doing, or option strategies, or just general market news. It's one of the best ways to stay updated. Link in the description down below. We're trying to get 1,000 members onto the thing. I think we're at 850, something like that. And it was just opened a couple weeks ago. So yes. All right. Key bullish reasons for buying Google stock. Number one, how can we not talk about Google DeepMind? Okay. This has been a software company collecting, probably copious amounts, if not the most amount of data than any other company in existence. And so obviously they can create some pretty unbelievable things in this new AI generation, like Gemini 2.0, like VO2, which is actually their video creation tools that they just recently put out, which if you compare them versus Sora, MKBHD recently put out a video on this as well. It's just unbelievable. It makes ChatGPT's products look like, a kid's project. This is the real deal over here. Imagine 3, Project Astra, AlphaFold for future biotech breakthroughs. It's unbelievable. Google DeepMind's doing a great thing here. Now, Google Cloud. Okay, this is another one. They are the 3rd largest player and by far one of the most dominant. It's really between the big 3 that this sort of cloud computing generation is sort of taking place. And Google is by far the fastest growing out of all of them. So cloud infrastructure revenues, 23% year over year. Google last quarter brought in 35% year over year growth. So they are taking market share away from the big players, and they're doing so while actually expanding margins faster. And if you can see in this black bar, they are actually growing the diversification through Google Cloud from essentially 7.7% of revenue to now nearly 13%. So this has been a big move. It helps me price out this company a lot better. Cloud is going to continue to grow, and there's essentially no slowdown for this at all. Another one is their hardware and devices. So Google Pixel is no longer a budget phone for people to choose from. It's not that was sort of the key back whenever it was Google Nexus phones. But now with this new Pixel lineup, they are priced similarly to the flagship phones of Samsung, iPhone, and now Google. This allows them to then put their better software products like Gemini 2.0 into these phones. And in fact, even the Gemini products are what actually helps Samsung create their AI products, because they don't really have an AI product. So they tap Google for those solutions. And then also all these Internet of Things, home security, all connected. Google Home is probably, if not the best solution up there with the Alexas of the world. And Apple also has a product line as well. All right. In terms of other bets and moonshot products, though, they have a lot. Waymo being probably the largest one that everyone's talking about as they continue to expand to new geographies. This is becoming a big regulatory issue where they're getting a lot of approval here. There is no driver in these cars, and you can book them today in those geographies. Like even if you look here, San Francisco, there are no safety drivers or anyone there to supervise other than, behind the scenes. And yet they just passed the market share for Lyft. Okay, just from August to now, they've taken over Lyft's market share. Why? Well, a lot of it has to do with pricing and safety. So without some other driver that, yes, potentially has gone through a background check or something like this, it still is awkward for people to get into another stranger's car, even if they've been slightly vetted by, Lyft or Uber. Getting into a car that has no one in there, it's a little bit safer for people to know that, they can sort of be themselves. They're not going to be feel nervous about someone else's presence. And then pricing, if you're not paying a driver, you don't have to charge as much. And then whatever price that Waymo gives you is the price that you're actually leaving with. There is no tipping that even gets prompted, which does actually factor into the end result of your trip, potentially allowing you to do more trips simultaneously if you can cut back on some of those expenses. Another other bet that they have is this Google subsidiary Wing. although being much earlier in its development than something like Waymo, they are actually working with DoorDash to do deliveries for Walmart in places like Dallas, Fort Worth, Texas. So, although starting small, working with the likes of DoorDash and Walmart is a way for them to be able to expand much quicker, especially in a good regulatory environment. This could become a very big thing going forward. They're not going to be the only player, but hopefully they take a large market share. And then by far, the largest moonshot project and the one that actually made me invest in Google and sort of change my trajectory on them, which was Willow, which was their hardware chip for quantum computing. This is super interesting, okay? Quantum computing could be the next massive, like frog leap in technological innovation, as we can throw so much more compute through quantum computing if they can actually get the error rate down and if they can actually keep those qubits stable, that this could potentially be like a million x the strongest supercomputers in existence, would be something that Google is essentially front running in this industry. This could be great for humanity, but also for Google stock if this becomes the next largest thing. There's so much to do in, commercial viability and scientific viability. This is just a very big moonshot project. Might not happen for the next 20 years, but it's great that they're working on this, finding great breakthroughs. And this is only going to be accelerated by advancements that they're getting in AI to actually help solve these problems in other areas like quantum computing. Another moonshot project here, Apptronic just recently partnered with Google DeepMind. So now they're dipping their toes into this robotics future. OpenAI is partnering with Figure, with Microsoft, and Tesla has Optimus. Well, Google has found their place with Apptronic. Amazon has their own bots, and they're probably the furthest ahead in terms of actual use cases for these robots. But Google does not want to fall behind either, and they're finding partners here. Hopefully, they make some massive revenues going forward in these moonshot projects as well. Lastly, for actual product conversation for why I'm bullish, and then we'll get into some other things, but is Google search. Okay. This is not losing market share as fast as people thought, and it's actually lowering as a percentage of revenue. So from Q3 of 2021 to Q3 of 2024, we went from 58% of revenue to 56% of revenue, and all while Google search is still growing in double digits. Last quarter, actually growing 12%. 12% is not a percentage that people usually say whenever they're talking about a product that is dying. Okay. We'd look for some negative growth rates in revenue. We're not even seeing that at all. So Google search is still growing very strongly. Valuation. Out of the Mag 7, which are all trying to dip their hands in potentially robotics or AI or all the future innovations that are keeping them the top of the list for strong technological companies in the United States, Google is by far the cheapest on a forward price to earnings ratio. This is a lot of just worry and concern that there are players like OpenAI that were going to disrupt their largest earnings. But this might not actually be the case. And they might actually be going for very, exciting growth projects in the future, like the ones that I've shown off just in this presentation. And while you're buying Google, you are not just buying for the stock to go up. Yes, they are doing things like the $70 billion buyback that will further the stock price. And you can see just from June of 2022 to September of 2024, the amount of shares that they've actually decreased in overall value. This is just amazing progress. So they are artificially bumping up EPS. But you also have a dividend, which is good for people that potentially, there might be some delays if the stock is staying steady, at least you're still making some money. But it also allows new institutions to potentially look at this company as a viable investment. So with only a 5% payout ratio, they can bring a 0.4% dividend that could bring in new funds and new institutions to the table. Now, where did I go wrong? Well, one of the biggest things that I thought was definitely bad for Google and big tech in general was just overall regulation. Back whenever I was getting super worried about Google's performance, back whenever OpenAI was first starting to show off ChatGPT 3, we weren't even talking about Trump coming back into office. Okay. So this idea that Lena Khan was going to be stepping away for potentially new FTC chairs that potentially are more conservative on things like mergers and acquisitions through big tech, well, that wasn't even clear to me at all. And like Dan I've said, let's be clear, today is a great day for the tech world in Silicon Valley with Khan finally gone from the FTC. Potentially, this could be better performance for things like Google. They are still potentially going through a breakup and these sort of things, but these are not concerns that shareholders need to worry about if you're just going to get shares in Google Cloud and YouTube and all of their different products just separately. Let's go back to this slide really quick. Google search was where I got it wrong. I thought that they were going to lose market share. It might actually be true that they are slightly losing market share once you look at both desktop and mobile. But even overall, they are still growing in this area and diversifying away from these revenue streams into other very high margin products like Google Cloud that potentially alleviate these problems, and they can still hold up this level. Like, people aren't flocking away from this. So during these times, they can go after all those moonshot projects while still maintaining a high level of growth, which is still very good. And lastly, in 18 months, we've reduced the cost. He's talking about the cost to run these models for like Gemini 2.0 by 90% of these queries through hardware, engineering, and technical breakthroughs, while doubling the size of our custom Gemini model. So essentially a 20x in their overall performance, because not only did they increase it by 90% cost savings, but they've also doubled the size of the model. So essentially a 20x better performance in running these models than what I was previously looking at over the last 18 months. But 18 months is not a long time. So where can we potentially see this over the next 18 months or few years after this, where potentially they're running these AI queries essentially at the same price as Google search? This could be a very good thing. And one of the things that I got wrong was just thinking that these Google searches were going to be, or their cost per search was going to skyrocket. It's seemingly not going to be the case. Now, things that I still dislike. Now, a couple things are normal, but a little bit is also political as well. First up, we have revenue breakdown. As much as Google search is diversifying away, and there are some things that are good about Google search still growing, it is still a concentration risk of their revenue. It is a massive portion. As much as it's a great monopoly that they're making tons of money in, Google Cloud is trying to become much bigger here. YouTube is growing very quickly. Their device is growing quickly. But even like things like Apptronic or Wing or Waymo fit into these tiny little slivers of this company. So as much as people get excited about these, just to put it into perspective, which people focus on this and discount all this, it can be a real risk to the business overall. And lastly, is a little bit of a culture fright for me at Google. So we've seen a couple of things happen, and I'm not trying to make a political statement here. All I'm trying to say is that whether or not you are the largest source for information, if you type in something like election, I'd assume or hope that there would be some level of a 50-50 split for both parties to give sort of a fair and unbiased result. Having it lean one way or the other would be a significant culture problem, in my opinion, which is what is happening at Google. They've seen this through their Google Gemini things, through image generations where they had problems there. And then lastly, it's hard to have a company where you are running and trying to make these deals, and you're having people that are working in this organization, which are going to happen whenever you have 180,000 employees, are taking political stances over a mission-driven stance of Google becoming one of the largest companies on earth. So they did actually do the right thing here and fire people that were protesting in the CEO's office over potential deals that the company is signing. Okay. In my opinion, it doesn't matter which side you actually care about. They have to be aligned with the business, and the organization is there to make money. And so it's hard to make political risks and tie that in with your own work. So they actually did, in my opinion, make the right decision here in firing people, but that could have been a big problem for them, which is keeping the culture under control. One thing I did not write in there is the CEO, Sundar Pichai. I'm not a big fan of his, to be honest. I think that he's the weakest CEO out of the Mag 7. I would prefer literally any of the other Meg 7 CEOs, but he's making it work. And a lot of the moonshot projects hopefully come to fruition. And that's why I'm betting on Google stock. Guys, in the description down below, let me know if you guys want another presentation like this for why I also invested in Amazon stock. Until next time, thank you all so much for watching. Really do appreciate your time, but bye for now.